After watching this video, you will know exactly what to look for in order to anticipate the daily directional bias. The idea is to take a lower time frame trade, capturing the entire range that is going to be produced on daily candles. In order to do this, I'm going to teach you 4 specific guidelines that will help you achieve this goal. Stick until the end of the video because I have a special announcement that you don't want to miss out. If you haven't watched my previous videos, I recommend you to go over them first because I teach everything you need to know in order to understand this video. So if you haven't, go check my playlist with organized teachings. So first, what we need to do is identify the structures. Are we trending or are we ranging? Basically, we need to look for different timeframes, weekly, monthly, and daily, and identify which were the most recent breakout market structures and origin on all these different timeframes. Looking at GBP, JPY, we can see that the most recent breakout market structure on the monthly swings was this one here. This breakout market structure was originated down here on this low, and this was the last higher high monthly structure. That means that we are currently trapped between this range, this high and this low on the monthly chart. Now going down into the weekly chart, we can see that the most recent breakout market structure happened up here. We can see that we have a breakout market structure. The origin of this breakout market structure on the weekly was down here, and the last high was this one. So that means that the weekly range is going to be from this high to this low down here. Moving on to the daily chart, we can see that the most recent breakout market structure happened to the upside with this move here. That means that the origin of this move was down here. This was the last higher high here, and that means that price is trapped within this range. We can see we have another range here on the daily chart, so we are going to take into account this one as well. The most recent break was to the upside as price violated this high, and the range is going to be from this low to this high here. Now going back into the monthly chart, what we want to do is identify the liquidity. Where is the external and internal liquidity? We can see here on the biggest swing on the monthly, we know that internal liquidity is going to be anything within the range from this low to this high. And what do we see here? All these lows that were internal liquidity were already taken, and price now is into a discount level where smart money previously accumulated orders. Okay, so in terms of liquidity, we have already taken all the lows that were inside of the range. Now going into the weekly chart, remember that weekly range is between this low and this high. We do see here that we have a lot of liquidity pending to be taken. We have all these lows as internal liquidity. We have a buoy here, all these lows, and we have the origin, which is the main order block. So we can mark this and the most recent ones, basically these equal lows that we have here on the weekly chart, and this buoy that is probably going to attract price in the future. So we have all this well annotated in our chart. External range liquidity on the weekly level is going to be up here, so I'm going to leave a note here. Now moving into a daily chart, remember that we identified 2 different structures here on the daily. This was the most recent breakout market structure. That means that internal range liquidity was anything inside of this range, and we can see all these lows were already taken. Price filled a void, touched an order block, and now is trying to push higher one more time. And now the price is trapped between this low and this high. We see this as internal range liquidity, we have a void, and we have this main order block where price originated this last push to the upside. So we are going to annotate these levels as they are going to be a reference for further price action. We have this void and we have this bullish order block that took liquidity and then pushed to the upside. Now moving back to the monthly chart, what we want to do is mark the target for each one of these ranges. Obviously, we need to anticipate what its price is going to do. So in order to do that, we need to logically create a story between market structure and liquidity. What can we see on the monthly? Well, we know that on the biggest swing on the monthly, price is bearish because we are making lower lows consistently. We had a bullish attempt here, but then later price broke the low that originated this bullish attempt. So now price is bearish. However, on the most recent price action, we can see that price has broken to the upside. And now that price is coming back to the region, as we analyzed at the beginning of the video, we can anticipate that the next logical target for price, now that it is at a discount level from a bullish move, is going to be at least this high, because remember that this is the highest point of the bullish range that we have on the monthly, and this represents the external range liquidity. So this is going to be the target for the monthly. As this is pretty far away, we don't need to care about that, but we have to keep in mind that the monthly is bullish. Now going into the weekly chart, we can see that after grabbing liquidity on the sell side, the equal lows that we talked about earlier, now the weekly has broken the structure to the upside. So if we are trading inside of the range from this high to this low, then anything inside of the range is going to contain liquidity. Remember that whenever price is consolidating, it's going to grab liquidity on the buy side and on the sell side. Now that we are coming from taking liquidity on the sell side, which one do you think is the next logical pool of liquidity that price is going to target? Well, if price has come from taking a sell side liquidity and breaking to the upside, the next logical pool of liquidity is going to be this high here. So this is going to be our weekly target. So price is going to continue being bullish until we hit this weekly target on the daily chart. So now moving forward into a daily chart, what do we see? We can see how we come from a bullish trend, which is inside of the weekly range, but now this is looking like a distribution. So why would price distribute up here? Well, it's very likely that this distribution is going to end up being a reaccumulation because price has still targets to be met on a weekly and a monthly level, okay? So taking that into account, we know that price is likely to grab liquidity before pushing higher, but we don't know that. The only thing we know is that each one of these moves has a target. For now, we can see our price has been bullish, pushing higher, making higher highs and higher lows, higher highs. Now we are building a potential high and low, so our anticipation is going to be for price to continue going higher and grab this higher high. And take into consideration that weekly and monthly charts are bullish, it makes sense for price to continue pushing higher in spite of building this, what it looks like a distribution, okay? So this is going to be our daily target. Now that we have framed different structures and different liquidity pools with different targets, we are going to talk about something that is very important. We expect price to respect the lows or the highs depending on if we are bullish or bearish. If we are bearish, then price should respect the highs, and if we are bullish, price should be able to respect the lows, because every time price is trending bullishly, it's going to leave behind higher lows. These higher lows is where smart money is accumulating orders and then pushing away from that accumulation. So we can expect that this low that was created as an accumulation is going to be respected. What I'm trying to say here is that if we look at this chart here, we can notice on the monthly chart that when price is pushing higher here, what is going on with the lows? This low, which was the origin of this entire move, was respected. The next low was respected, 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 and now respected as well. We can see that now that price is bullish on a bullish move, the lows are getting respected over and over again. The same happens on the weekly chart. If we look at the weekly, we can see that whenever price is ready to push higher, the lows are going to be respected over and over again, as you can see on this trend. And on the daily chart, the same thing happens. When price is trending to the upside, the lows are going to be respected. Here, for example, we have a trend to the upside, and you can see the lows are getting respected. So how can we tell when price is going to respect the lows or the highs and when they are going to be violated? Basically, when price is hitting a higher time frame liquidity pool or a higher time frame mitigation level, we can expect the lower time frame to grab liquidity. So basically what I'm saying here is that when price is bullish on the daily, but we are hitting a weekly order block, we can expect a grab of liquidity to happen. So for example, if we look at this recent price action where price was making higher highs and higher lows on the daily chart, price, when it was pushing higher on each one of these swings, you can see that the lows were respected over and over again. Price is not attacking the lows because the target for this up move is probably going to be above this high, which is external range liquidity, and at a key level here on the weekly chart, which is going to be an order block. And we can see we have a massive distribution here on the weekly and monthly level, so it is expectable that this level, these order blocks, the most premium ones, for example this one right here and this one, which is the main origin of all, are going to produce a mitigation on lower time frames. So if we drag this to the right, we're going to see that right after price hits this level for the first time on the daily chart, that's when this rule of respecting the lows gets broken, because now this order block that is very old and where smart money spent a lot of time distributing, basically accumulating short, is getting mitigated, okay? So that's why when price is hitting this level, we can expect a liquidity grab. And when that liquidity grab happens, it creates another short-term short on the daily chart. And the same thing will happen. Now the highs are going to get respected over and over again. We can see that with this last stop hunt, basically when price already grabbed liquidity on the buy side and now is going to look for liquidity internally below each one of these lows, that's when the highs starts being respected. We have this high respected, high respected, high respected. Even this high, that is tiny little bit, was respected by this tiny little candle, this tiny little wick, sorry. And now that price is hitting another key level on the weekly chart, which is an order block, that was originated down here on the daily, we see the same process repeat over again, and we can see that price is respecting the lows over and over and over again until we hit the next target, which is going to be external liquidity and the same order block on the monthly level that is going to get mitigated one more time. And this process happened over and over again. So basically what I'm saying here is that we detect what is price doing on the weekly and monthly level. We can anticipate the daily to follow that move and be represented with price respecting the lows or disrespecting it if there's going to be a change of trend. Okay, so not only a change of trend but also continuations. So for example, currently price is on an uptrend because we just broke this lower high here on the daily chart, and we expect the target to be this high here because we already analyzed that this price is in a bullish move on the daily, and we have a weekly external liquidity up here, so price is likely to continue on higher. So for the next daily candle on GJ, what are we going to expect? Well, where is price currently in? Is barely touching this void. So what we can expect is for price to make a move to the downside, touch this main order block or this one specifically, and then attempt to go higher. So for the next daily candle, we expect this high to be respected. Basically, if price decides to go higher, we can look for shorts up here or inside of here. It depends on lower time frame structure, but the idea is that this level should be respected. So as soon as the next daily candle starts, we can mark this level as a key important level that should be respected, and we can frame shorts around this level. Why shorts? Because obviously price is at an external range liquidity. Basically, it's coming from grabbing liquidity externally above this high, is touching a higher time frame level, this order block that is going to get mitigated right now, and we have lower target here to be met, this order block and the void. So we can expect another move to the downside, and from here ideally turning bullish one more time. Remember, when we are hitting a key higher time frame level, expect the daily to enter in consolidation, and when price is moving forward after grabbing the liquidity, expect the highs and the lows be respected depending on if we are on a bullish or a bearish trend. Thank you all for hitting 5,000 subscribers. We are now 5,000 smart money traders inside of my channel. So I'm going to give away 4 one-on-ones. The only thing you need to do is like the video, subscribe if you're not, and then leave down in the comments hashtag SMS. The winner is going to be announced in my Instagram, so be sure to follow me /your smart money source. You can check the links in the description, and it's going to be announced next Friday, May the 8th at around 6 p.m. GMT +2. So don't forget, leave a comment, hashtag SMS, like the video, subscribe, and see you guys in the next one.